Good morning, it's Harvey Jackson. Just going to get through some USDA trade estimates and just another look at the North America drought and crop production because of the lack of drought and where it is, I guess, more than anything. So you can have a look here. The average corn estimates are pretty high here. You can see 184.3 is the trade estimates. And it's a big range, of course, but that's just trying to put it in the middle. And the soybeans are a little bit higher than last month's World Agricultural Board estimates that came out, and the same thing for both of those crops, right? So just slightly higher on the soybeans and a few bushels higher on the corn, and that's what is expected. And I think the market is starting to trade those things, so it's starting to trade higher yields, and that's why soybeans and corn are trading at some lows. But we're seeing the market maybe having that all priced in, but we'll have to see when we get to August 12th and the numbers are coming out, because it's actually measured this time. This is just from Darren Fesser, some of his notes that he took here. So momentum traders are max short, max long on cattle and feeders, reduced bearish momentum on corn, wheat, soybeans, where they were max short. So he's figuring that there might be some lightening up of those shorts, of course, which would be good. China inflation, macro grains, food prices were at its high. I've got a slide talking about that as well. And then he's got some pricing levels. He posted this on X. World food prices at 2-year high. And again, there's just certain information that gets posted out here. So I don't know, you can maybe conspiracy theory some of this as well. But meat prices index up 1.2. And they're talking about beef being the biggest price increase, and yet pork has really done nothing. The vegetable price index is up 7.1 month on month. So they go from whether it's month on month and then they go month by month. So it's just how they're actually maybe putting the emphasis on some of this price. The cereal price index eased as prices have come down, and yeah, we'll just stop there because there's some like rice went up and whatever, right? But anyway, this is Brian Split put out this graphic on X as well, and he's just a comparison that there is from a previous cycle back in 2008, how that descending wedge, and you broke out of it. And I've been talking about this for a while, so expect some market to break out of that descending wedge that we have, and that's on a monthly chart. So let's just have a look at the drought index, decrease in drought, and you can see here there's like corn's only in 3% drought, soybeans are only in 3% drought, spring wheat's in 35%, but all of this is basically held or hasn't increased. But here I'm just going to flip through these fairly quick. You can see where corn is, the bullseye, very little drought. The same thing with soybeans. Spring wheat, though, has a little bit of drought, and some of that might be in the flowing over into Canada, of course, but we'll look at some of those weather maps. And here's winter wheat, again, the biggest growing region down in Kansas, and very little drought in there. And yet, when you look at this soil moisture percentile from NASA, it looks like there's some drought there, but this is measuring soil moisture, and you can see that there is pretty good soil moisture in a lot of the major areas. And then when you look at the Canadian prairies, the drought, trying to use some of the same modeling that the U.S. uses, and it's showing drought in that I call it the yellowhead corridor, and obviously that's where the majority of the drought is, and very little in the other wedge down below. Just a difference in soil moisture. So this is, you can see where the biggest differences are. You got the Peace River region north of Edmonton, and then you got Saskatoon in that wedge going down, covering almost all of Manitoba. Here we're looking at heat advisory again in the center of the country. Here's your weather, or your active radar going across. So we're getting a little bit of rain. We finally got some. We're up in this area here. We got a touch of rain last night, but there was no thunder showers, and yet when you get to Brandon, south of Brandon, there was all kinds of severe weather warnings showing up. Here's your active weather going across. So the next few days looks like we're going to have some more rain, possible. And when we're looking at all these maps, you're looking for the positive areas, and I would say this here would be great if we can get some of those fires put out. And there's not a whole lot of rain in other areas, but at this stage there isn't a whole lot of hope for it to help a lot of crops now. So it could stop raining, I guess, now. But let's put out those fires. Same thing with the European artificial intelligence model. Just the count of days with precipitation below half a millimeter, so it traces. But you can see where the area that's huge again is that yellowhead corridor. Just a quick look at the markets here. Canola's down a little bit, and European rapeseed is down like $3. Soybean oil down 17 cent or 0.17 cents. Palm oil is up on its close. Crude oil up slightly as well. Soybeans down 2.25 cents, and your wheat's some up and some down. Just basically hardly any change as if I printed it here. The Canadian dollar looks like it's up a little bit. So just have a look at it. We're in the middle of the range. We're right at this 50% retracement value, and it looks like we're going to maybe possibly bounce off of there. But we would be holding on to any of those three-way positions, I think, until we get through the USDA on August 12th, as that could be a stimulus to go either direction there. European rapeseed, you're on the 23.6 retracement value, but basically trying to punch through there. Soybean oil futures looks like it's actually trying to punch through the 78.6 retracement, and it's coming up against the medium turn moving average right down in here at the 53.1. Soybean futures not at the full downward movement here, but it is at the bottom end of this wedge on the way down here, or the channel. When you look at soybean meal futures, we've actually bounced off the floor, but kind of still trading in that lower highs range here. Still not changed the trend at all. Crude palm oil, it looks like we're consolidating, going sideways here at the moment. Canadian dollar, same kind of thing, where it looks like we're going to try to hang out here at this 73 cent range here. US dollar, it still looks like it's going to go back down in this range, but you would say that we're making maybe a wedge going up here, but it's hard to say yet. It looks like we've got a little wee bit of a recovery on wheat. Now, it could be a buy signal, but I'm still going to be a little bit cautious on getting into this one, just for the fact that look how long we've been in this buy signal scenario. We have to break out of this, and that's where the buy signal is on the slow stochastics anyway. Here, Kansas showing the same thing, up against the short-term moving average on both Kansas and Chicago. And then your wheat futures up against your short-term moving average as well. Here's the positive. Live cattle futures making new highs. Feeder cattle making new highs. Hogs kind of trading in the upper range of the trading range that we have there. And August 12th, the USDA crop production is the next substantial news, and hope everybody has a good weekend.